So we will start with today's class. First, let's understand what is the weightage of this chapter in our CMA final law paper. So this insurance law is there in your syllabus for 19 pages, and by studying only 19 pages, you can score simply 5 to 7 marks. So, and this is very easy as compared to Companies Act, right? So, if you go through the scanner, then you can find that. There is a weightage of 5 marks in the long question, and if you include the syllabus of if you include the MCQs also, then you can get 5 to 7 marks from this particular chapter, right? Hi Pavan. Hi. Okay. So the entire insurance law in the CMA final syllabus is covered into two parts. One is part A, that is your Insurance Act 1938, and the second is your IRDA Act 1999, which is your Insurance Regulatory and Development Authority Act, right? So in today's class, basically we will understand what do you mean by insurance, and the basic history and basic terminology of this, and in the next class onwards, we will start with the principles of insurance. So, to build your base, today's class is very important, right? Now, today, okay, so yesterday I witnessed one incident. So, there is a little girl who lives in my neighborhood, and she was throwing her mother's phone again and again. But her mother was very carefree about it. So when I asked her, why are you so carefree about it? Then she told me that no, my phone is insured. So even if she throws it thousands of times, there is no issue because I'm mentally free that I'll have to suffer a financial loss, right? So that is the basic thing, that is the basic concept of getting your insurance done, right? So when this incident happened yesterday, I thought of giving this example in today's class. So yes, now let's start with the main content of insurance law. Part A, Insurance Act 1938. So I think everybody of us might be knowing the basic of insurance, right? So what happens? A group of people are giving some amount of money known as the premium to the insurance company, and at the end, whoever is having a mishap, or whoever is having an uncertain risk of death, or maybe some accident or anything through which he is going to suffer a loss, so in that case, what happens? That particular person is now insured, right? At the end, whatever loss that person is going to suffer, whatever possible financial loss that person is going to suffer, that is divided amongst a large number of people, right? So let's understand this. Insurance is a method of spreading a possible financial loss. Why we are saying a possible financial loss? Because it is uncertain in nature, right? It is not certain. It may happen, it may not happen also. It is contingent, right? There is a contingency attached to it. A possible financial loss which was too big to be borne by an individual. It is too big to be borne by an individual. It means one person cannot suffer this huge loss, right? One person cannot bear this entire amount of loss. So now this financial loss, or this entire heavy amount, is divided amongst a large number of people. So this method or this process is known as insurance, right? Now you can see there is a small diagram here in the red circle. So one person is there. This one person, if that this person has not done his insurance, then this person is supposed to bear the entire financial loss amount, right? But now because this person is has done the insurance, so the entire money will be distributed amongst large number of persons. So here for diagram purpose, I have shown four number of people. So 5%, 15%, 50%, like this, the entire amount is divided amongst other people, right? Now, what is the fundamental function of loss? Fundamental function of insurance? It is to shift the loss suffered. Whatever loss the person has suffered, to shift that loss amongst other people. That is the fundamental function, right? So the fundamental function is to shift the loss suffered by a sole individual to a willing and capable professional risk bearer. When we are saying willing and capable professional risk bearer, it means we are talking about the insurance company, because insurance company is willing and obviously insurance company is capable of bearing the entire amount of risk, right? In consideration of a small amount. What is the meaning of consideration? I think we all have studied in Contract Act 1872. The meaning of consideration is something in return, right? So in section 2, clause D of Contract Act, we have studied the definition of consideration. So in this case, the loss is being shifted, but in return, we have to pay some small amount, which is known as the premium, right? Which is known as the premium. So now you can see another green circle, inside which you can see another diagram where four persons are there. They are providing some amount of premium to the insurance company, right? And in return, what happens if any mishap happens? I'm talking about life insurance, right? If any mishap happens, so in this case, whatever financial loss the person is suffering from, that will be covered. And if there is no mishap, then at the end of the policy, or when the policy matures, at that time you will get a lump sum maturity amount, right? That is your either loss or maturity. Now, right now I told you in case of life insurance only. So what happens in case of general insurance? It doesn't really it doesn't really matter. Why? Because in case of general insurance, if nothing mishap is happening, so in that case, what happens? Whatever premium you have paid, you will not get that back, right? But in case of life insurance, either you will get your entire loss covered, or you will get your matured amount at the end, right? Now, let's understand the constitutional provision of insurance. Insurance is included in union list. Now I know we all are a little bit aware of union list, state list, concurrent list, right? What is union list? Whatever decisions are taken in the parliament, whatever subject matter are discussed in the parliament, that is known as your union list, right? So insurance is included. Insurance is a matter which is included in the union list. Hence, central legislature is empowered to regulate the entire insurance industry in India, which means any law in relation to insurance is uniform throughout all the territories of India. In every state, in every union territory, the insurance law is uniform. It is similar for everybody, right? It is same for everybody, not similar, it is same, right? I hope this is clear. Okay. Now, let's understand the history of insurance in India. So, the concept of insurance in India is prevalent in Hindus, mostly even before the Britishers came, right? So we know in history that there were many overseas traders in our country who used to travel through oceans and seas to do their trading, right? So at that time, even at that time, marine insurance was there. Marine insurance for their entire goods used to be there. And also we know in India, joint family system is prevalent. So at that time, social insurance is another thing which is there in our country, right? Okay. Now coming to the main thing, if you are getting a question on history of insurance law in India, uh, like there are very less chances of getting such questions in CMA final level. But yes, if you are getting, then you can write all those things. Prior to 1912, there was no insurance law in India, right? At that time, every insurance company in India used to get governed by Companies Act 1882. Now we all know right now Companies Act 2013 is prevalent, right? Before this, we have studied that Companies Act 1956 was there, and before that 1913 was there, right? And before 1913, Companies Act 1882 used to be there, right? So, what happened in the year 1912? Indian Life Insurance Companies Act 1912 was passed. But the main thing was that this particular act used to deal only with life insurance. it was not dealing with general insurance, or we can say it was not dealing with non-life insurance, right? So also because it was the first insurance companies act in our country, so many defects were there in this particular act. For example, whatever amount this company used to generate through the premium amount, so there was no restriction or no limitation on the investment of their funds, right? On the investment of their funds. So due to all these defects, there was no proper administration, and this Companies Act was a total failure in our country. So after that, what happened in the year 1935? Government of India proceeds with reform of insurance law, right? Reform of insurance law, and one advisory committee was appointed for it, and Government of India introduced the bill in the Legislative Assembly in 1937, and then the Insurance Act 1938 was came in India, right? Now, this Insurance Act 1938 was enforced on 1st July 1939. So, you can remember this date because you may get MCQs asking for this particular date, like when Insurance Act 1938 was enforced. So, the answer is 1st July 1939, right? Okay, so I can see many people have joined. Sakshi, Sonu, and I think this is Vanika. So I hope I'm audible and you can also see the PDF properly. You can write here. Yeah. So yes, it is visible. So now let's talk about the life insurance business in India. Now, when we say life insurance, the only thing that comes to your mind is LIC, right? LIC is very popular in India. So it is very popular because life insurance business was nationalized in 1956, and at that time only Life Insurance Corporation of India Act was passed, and it came into existence from 1st September 1956. Okay, so and also one more thing, that Life Insurance Corporation and also General Insurance Corporation, these two are PSUs which are there in our country, right? So you all are say the final students. So I don't think I need to make you understand what is the meaning of PSU, right? So okay, so we spoke about life insurance business. Now we are talking about general insurance business. So General Insurance Business Nationalization Act came in 1972. So before the private players came into the insurance sector in India, there were only two state insurers. One is obviously your life insurance because it has been there in our country since so long, so it has become very popular. And the second player was GIC of India, which is your General Insurance Corporation of India. And right now there are four subsidiaries of GIC, right? Four subsidiaries of GIC. Now, so right now we studied that before the private players came into the market. So now let's understand why the need of private players came in the market. The need was arise because, okay, so in the year 1991, you all might be remembering that our country was going through so much of economic crunch, right? So at that time only LPG happened. What is the meaning of LPG? LPG is liberalization, privatization, and globalization, right? So at that time, you can say the economic condition of India was deteriorating, right? So, in the year 1991, new economic policies were introduced when LPG happened. Okay. So, after that, insurance market in India was opened for private sector in the year 2000. Why? Because Insurance Regulatory and Development Authority of India Act came in the year 1999. So, after that, what happened? The insurance industry in India was open for all the private sector. So right now, according to the calculation of 2020 October, right now we have 57 insurance companies which are operating in India. There are 24 life insurance, companies and 33 general insurance companies. So when we say general insurance companies, so I think two very famous names come to our mind. One is obviously Bajaj Allianz, and the second is what? ICICI Lombard, because their marketing is phenomenal, right? Also, in case of life insurance, we know LIC, we also know Kotak Life Insurance, and all those things, right? Now, because right now we have so many big players in the market, so obviously when one industry is growing in India, so obviously foreign investors will be willing to invest in that sector in our country, right? So what happened? There is a limit for FDI set in insurance sector. Now, what is FDI? We all are say final students, right? So we know FDI means foreign direct investment. What is foreign direct investment? When one foreign investor is there and he is trying to invest in an Indian company or in an Indian sector, right? In a particular industry for long term, and through equity he wants to invest, then that is known as FDI or foreign direct investment, right? Now, you can think that if one person is investing for long term and investing in equity, that means obviously the main objective of that investor is to get control over the company, to get control over the management of company, right? So obviously our country cannot cannot provide entire control in a foreign investor's hand. So to control this particular scenario, government of India did one thing, that government of India introduced two routes of FDI in India, two ways through which one foreign investor can invest in our country, right? In a particular sector. So there are two routes. One is approval route and one is automatic route. So all these things are written in which act? It is written in FEMA 1999. What is FEMA? Foreign Exchange Management Act, right? So their FDI policy is given where all those things are written. So what do you mean by approval route? Approval route is that route through in which you have to get the government approval before making FDI in a relevant sector, right? You have to take the central government approval. And what do you mean by automatic route? No government approval is required before you make any FDI in that sector, right? So let's first understand this old provision. You can see point number 9. So when this Insurance Act came in India, at that time, up to 26% FDI was permitted through automatic route, right? It was permitted through automatic route in which no government approval is needed. But after the amendment of 2015, this particular limitation was increased to 49% through automatic route. Like one foreign investor can invest in that sector up to 49%, right? Through automatic route, which means central government approval is not required. But right now, again, another amendment came. I don't remember exactly in which year, maybe in 2020 or 21. Another amendment came in which the limit was again increased to 74%, right? So earlier it was up to 49% FDI through automatic route, and beyond 49%, you can invest through approval route. But right now, up to 74% FDI is allowed through automatic route, and beyond 74% it is not at all allowed. Now we can get the logic behind this 74% number, because we know in any company, to make any big decision or to decide something very huge in an important matter, we need to pass SR, right? What is SR? Special resolution we need to pass, and we know special resolution can be passed when 75% voting is done, right? 75% voting is done. So for that reason only this 74% figure was derived, right? So that no SR can be passed and no big decisions can be made by that foreign investor, right? So the whatever big decisions are there, all those control will be within us. It will be with the company, with the Indian management only, right? So for that reason only this amount was increased to 74%. And if any investor wants to invest beyond 74%, then it is not at all allowed. Right? I hope this is clear. Okay. So here we can say that one more important thing is there. 100% FDI is permitted in insurance intermediaries, right? So insurance intermediary means whoever insurance brokers are there, like your policy bazaar, right? This is very famous. So whenever we speak about any insurance intermediary, policy bazaar is the first name that comes to our mind. So in the case of insurance intermediaries, 100% FDI is permitted, right? Okay, so I hope this is clear. You can write in the chat box if you have any doubt till now. Okay, so now we will understand what are the utilities of insurance. Why do we make insurance, right? So whatever points I have tick marked in pink color, all those things are very easy to remember, and we can remember that. And you only need to remember 4 to 5 points, because it is very rare that you'll get such easy questions in CMA final level, right? So the first point is that obviously we all know why do we make insurance, because insurance provides safety and security against a possible loss on a particular event, right? The second point says that insurance reduces the business risk or losses. Obviously, because the insurance company will pay a certain fixed amount known as premium, and the insurance company will pay a fixed amount at the time of death or at the time of the mishap, right? Which is your which is a lump sum amount, right? So obviously, it reduces the business risk or the losses. Now, the next point is that life insurance encourages the habit of regular and systematic saving through premium and getting a lump sum amount after the policy matures, right? So here, whenever we are talking about maturity, whenever we are talking about getting a lump sum amount, so it is always related to life insurance only. In case of general insurance, no such thing is there, because in case of general insurance, जो प्रीमियम अमाउंट दे दिया वो गया, you are not going to get a lump sum amount at the end. In case of general insurance, what happens? Whatever amount you have paid, if any mishap happens, or if any accident or anything happens in which you are having a loss, then that loss will be covered, definitely covered. But you are not going to get a lump sum amount after maturity. This concept of maturity lies only in case of life insurance, right? I hope this is clear. Okay. Now, the insured person can get a loan by pledging insurance policy. Okay. Now, who is the insured person? Insured person is that person who is covered under the policy, right? For example, I am doing LIC for myself, life insurance for myself. So in this case, I am the insured and LIC is the insurer, right? So if I am in need of any fund, so in this case, what I can do, I can pledge the insurance policy and I can get loan against that. And in this case, what happens? The interest will not exceed the cash value of policy which is charged by the insurer, right? Which is charged by the insurer. So the interest amount of the loan will not exceed the cash value of the policy. So this is again another thing, right? Now, uh, fifth point is very important, and this we can write even without studying. It is that the insured gets tax benefit in life insurance. Obviously, we know in which section of insurance of Income Tax Act we get tax benefit. If anybody can say. Okay, so giving you a hint, it is in deduction chapter we all have studied. So it is section 80C, right? 80C, 1.5 lakhs premium amount tak you can get tax benefit, right? Now, coming to the next point, which says that the security and welfare of employees are easily met in case of life insurance, accident, or the sickness benefit or pension, right? Which are generally provided by group insurance. Why? Because the premium of the group insurance is generally paid by the employer, right? So every employee is in if such provisions are there in the company. So in this case, the security and welfare of the employees are met by the group insurance only. So this is again another utility. Now, the next is that the insurance reduces the fear of future risk. Obviously, it reduces the fear because since you have done an insurance, so you're carefree. That I don't need to I don't need to think about whether what will happen if this particular accident happens, right? So it obviously reduces the fear. Now we will understand what are the importances of insurance which can be availed by the insured person, right? So the first point, obviously, it provides peace of mind because it removes all the tension, fear, anxiety, etc. Now, insurance accelerates the economic growth of the country by providing protection against different kinds of losses, right? Obviously, it accelerates the economic growth and it also promotes the foreign trade. So, how it accelerates the economic growth, that we will understand in 2 to 3 minutes. And it also protects the social wealth, right? It also protects the social wealth because there are many social problems which insurance solves, like unemployment by generating employment opportunities, and it also increases the efficiency of any business, right? Because it eliminates the loss of damage of goods, right? It eliminates the loss of damage of goods, and in that case, what happens? It accelerates the economic growth. Now, we know that insurance helps in attracting the foreign investors through FDI, right? So, according to the recent amendment, FDI percentage has been increased to 74% through automatic route. What does it mean? It means foreign investors are getting more and more. The foreign investors are investing more and more money in Indian insurance sector, right? सो नाउ व्हाट हैपेंस सो obviously अगर बाहर का पैसा इंडिया में आ रहा है, if foreign money is coming to India, so it will help in capital formation, which is very important for a developing country like India, right? So it will automatically lead to acceleration of production, right? Whatever production things are happening in India, it will accelerate that process, and it will also lubricate the machinery of production and distribution. Now you may say what machinery is required in insurance law. So machinery means mechanism here, right? It will also accelerate. It will also lubricate. Lubricate means it will act as a catalyst in the production and distribution mechanism in our country, right? Also, uh, obviously, if you're getting more and more fund, more and more capital is getting formed, so whatever resources are there in our country, that will mobilize. Once the resources start mobilizing, after that, economy will automatically improve, right? The country's economy will automatically improve. And then what happens? After a certain point of time, the economy is accelerating, the growth of economy is accelerating, and after a certain point of time, it gets stabilized. So when the economy gets stabilized, at that time only, inflation rate will also decrease, right? Nowadays in India, inflation is बहुत ज़्यादा inflation हो रहा है, right? But if you go to countries like Japan, where there has been no inflation since last 15 to 20 years, why? Because the growth in the economy of Japan has become stabilized, right? It is not fluctuating like India. It is not so dynamic like India. So obviously, insurance also helps in stabilizing the growth of economy of a country, right? Okay. Now we will understand one more thing, that when we are talking about the regulation of insurance companies, so in this case, what happens? These are regulated by, all the insurance companies in India are regulated by IRDAI, right? Insurance Regulatory and Development Authority of India. But when any insurance company gets incorporated, it gets incorporated according to all the provisions of the Companies Act, of the Prevalent Companies Act, right? What is the Prevalent Companies Act? Companies Act 2013 in our country right now. So why? Because insurance companies are also companies, so they will also get incorporated according to the Companies Act, right? Now, who are the parties to a particular insurance policy, right? So there are generally two parties. One is the insurer and one is the insured. Who is an insurer? Insurer is that person who underwrites the risk. Underwrites means who agrees to pay money. Who agrees to pay money on the happening of a contingency, that person is called the insurer. So, in most of the cases, the insurance companies are the insurers, right? And they also provide monetary benefit to the person insured for that particular risk. For example, I am the person, I have done a policy for life insurance policy. So in that case, I am the person who is insured. So insurer is LIC. So LIC will provide monetary benefit to me for this particular risk, right? So insurer helps a lot to the insured for recovering the loss. Obviously, it helps in recovering the loss. Okay. Now, who's the insured? I told you I am the insured in this particular case. So the party who seeks protection against a specific risk and is entitled to get money from the insurer in the event of happening of a stated contingency. Contingency means anything which has two possibilities, either happening or not happening, right? So in case of any one possibility is there. So if that thing has happened, so in that case, what happens? The party who is supposed to get the money in the happening of that contingency is known as the insured. And in the following classes, we will also refer the insured as the policy holder, right? As the policy holder. So insured is a person who gets insurance for himself, his life or property or any other thing for safety or security, right? I hope this is you have understood this. Okay. So what happens in insurance? We have studied contract in the Contract Act, in CMA Intermediate, CMA Foundation. You also might have studied in your BCom, right? So in contract, what happens? uh, Two things are there: proposal and acceptance, right? In I guess in section 2 clause A, proposal has been defined, and in section 2 clause B, acceptance has been defined. One person is the proposer, and the person who accepts is known as the acceptor, right? Similarly, in case of contract of insurance also, there are two parties, one who proposes and the second who accepts. So in this case, who's the proposer? Obviously, insurer is the proposer, and who is insured? Insured is the person who is accepting the policy, accepting the terms and conditions of the policy, right? I hope this is clear. So now you might be thinking, what is the main difference between a contract, between a normal contract and an insurance contract, contract of insurance? The main difference is that one element is missing in a normal contract, that is utmost good faith. Utmost good faith is there in a contract of insurance, because both the parties, insurer and the insured, they are supposed to disclose all the facts which are material for each other to know, right? For example, a person who is the insured, he is going for a life insurance policy or maybe a health insurance policy. So if that person is having diabetes, then that person is supposed to disclose the fact, right? Now this person does one mischief that he has taken a lot of insulin before going for the medical test, before going for the blood test, right? And somehow in the report, the diabetes is not shown. So in this case, what happens? If this particular thing is proved, then this person will be found guilty. Guilty of what? Guilty of not disclosing the fact which is material, right? Material for the insurer to know, right? Because he is doing a health policy, health insurance, so it is obvious for the insurer to be aware of all the medical status of the person, of the policy holder, right? Or of the insured. So this is what we are talking about here. Both the parties of insurance contract, right? Okay. Now we will understand what are the two kinds of insurances. Okay, so 43 minutes has already happened. We have already come for 44 minutes. So should we continue the class, or in the next class we will understand this? Do let me know in the chat box. Can we get this PDF? Yes, after the completion of the entire series, I'll send this PDF in my Telegram group. I think it will take around four classes. So yeah. Okay, so should we continue or should we stop today's class here only? After 3 or 4 days, I'll come with another class. So we will complete the entire Insurance Act in four classes. Okay, so there was some internet issue from my end. Yeah, so let's do a quick recap of whatever we studied right now. So we started with what is the meaning of insurance. So it is a okay. So do let me know whether I'm audible to everybody or not. Okay, fine. Okay, thank you. So what is insurance? Insurance is a method of spreading a possible financial loss, which is obviously contingent, which is too big for a person, for one person to bear. So what do we do? Okay, which is too big to bear by one individual. So we spread the entire financial loss over a large number of persons, right? That is known as insurance. And what is the fundamental function? To shift the loss suffered by one individual to a willing and capable professional risk bearer in consideration or in return of a small amount, right? Now we know insurance is included in the union list, so obviously central legislature will regulate the insurance industry, and the insurance law will be uniform, or it will be same throughout the territories of India, right? Now in the history we studied that before 1912 no insurance law was there, and in the year 1912 Indian Life Insurance Companies Act came, which was a huge failure. So after that, in the year 1938, the Insurance Act was introduced, right? And it was enforced on 1st July 1939. Similarly, Life Insurance Act came in 1956. General Insurance Business Nationalization Act came in 1972. And before the private players came in the market, there were only two state insurers, right? LIC and GIC. Similarly, after 1991, when LPG happened, liberalization, privatization, and globalization, at that time many private players came in the insurance business, right? Right now, we have 57 insurance companies, out of which 24 are life insurance and 33 are general insurance. And we also studied what is the meaning of FDI, right? What is the meaning of FDI? How many routes of FDI are there in India? One is approval, one is automatic. And what is the limit for automatic FDI? For insurance sector, it is 74%. We also studied what is the reason. The reason is that so that no special resolution can be passed and no big decisions can be made, right? Okay. Now, the next thing that we studied is what are the utilities. Obviously, it provides safety and security. There are tax benefits for the insured. It reduces business risk and losses. Also, if you're doing life insurance, then you get a habit of regular and systematic saving through the amount of premium. Because only in case of life insurance you're going to get the maturity amount at the end if everything goes well, right? Similarly, it also reduces the fear of future risk, and also security and welfare of all the employees are covered through the group insurance, right? So these are the utilities of insurance. Similarly, if there is any question called importance of insurance, so you can simply write that it accelerates the production, it improves the economy, it mobilizes the resources, it lubricates the mechanism of production and distribution of the sector. And also, one more thing you can write here is it also solves the unemployment issue. And one more important point here in the point number 3, you can write to reduce the inflation. We also learned how it reduces the inflation, right? And yeah, we also studied how many parties are there in an insurance business, right? One is the insurer and another one is the insured. What is meaning of insured? Insured is the policy holder, right? For in the further classes, we will also refer the insured as the policy holder for better understanding. And when it comes to the insurer, generally the insurance companies are the insurers, right? One more thing we studied today is insurance companies are regulated by IRDI. But when it comes to the incorporation of those companies, they get incorporated according to the Prevalent Companies Act. Whatever Companies Act is prevalent in your country right now, according to that, right? So yeah, we also studied that in insurance contract, what happens? There are two things: proposal and acceptance, like any other contract. And one important thing which like differentiates the insurance contract from a normal contract is utmost good faith, right? So when we will study the principles of insurance law, in that the first principle is this particular thing, utmost good faith, which talks about the disclosure of facts which are material for both the parties, right? यहाँ पर ना तो इंश्योरर कुछ छुपाएगा ना ही इंश्योर कुछ छुपाएगा. Neither of the parties are supposed to hide any material information from each other, right? So this is everything which we studied today. Okay, Shravan has also joined. Shravan, you are already late because we are on the verge of completing the class. We also completed the revision by now. So it's better if you join the next class, which I'll conduct on maybe on 10th or 11th evening. So it's better if you join that class early, right? And yes, this PDF you can get at the end of this series. I'm planning to complete this entire insurance law in 4 classes. So at the end of the entire series, or in the at the end of all these 4 classes, you can join. You can get the PDF in my Telegram group. Name of my Telegram group is CMA with the Witty Turtle, right? Yeah, so by now we have completed 55 minutes and the class is going to end in 5 minutes. If you have any doubt, then you can write it here in the chat box. Also, if you like the class, then do let me know so that I'll be motivated to take more classes for everybody.